A record-breaking 52,188 Singapore dollars monthly rental bid for a GP clinic space in an HDB block in Tampines has sparked public concern over healthcare affordability. The 50 square metre unit at Block 954C Tampines Street 96 was awarded to iHealth Medical Holdings after a sealed tender closed on 14 January 2025. The high rent was highlighted by Dr. Hisham Badarudin on LinkedIn and widely discussed on Reddit, with many questioning the impact on clinic fees. However, iHealth co-owner Andrew Chim defended the bid, citing the unit's prime location near 5 BTO projects and upcoming developments. Our assessment is based on our understanding of the number of units in the area and the surrounding competition, Chim said. Despite 5 nearby clinics, he believes the area can support more. Chim assured that consultation fees will remain competitive at 30 Singapore dollars to 35 Singapore dollars. The clinic, opening on 26 June, will offer extended hours and aims to serve 70 to 90 patients daily within a year. Profitability is projected within 2 years. While some fear industry-wide rent inflation, Chim noted that landlords may still struggle to find tenants at such rates. This is iHealth's first successful HDB tender after previously missing out due to cash flow constraints. The 52k Singapore dollars rent is not an isolated case. A review of recent HDB tender results reveals a pattern of high rental bids for clinic units. In January, a unit at Block 235 BTR Garden Walk attracted a winning bid of 40,088 Singapore dollars from Dr. Daphne Lee, beating 7 other bidders. That same month, Caring Medical Clinic successfully secured a unit at Block 666 Tampines Street 64 with a 25,388 Singapore dollars bid. In another tender that closed in March, Normanton Healthcare Private Limited emerged as the sole bidder for a unit at Block 88A Telok Blangah Heights, winning the lease at $16,800 per month. Meanwhile, a December 2024 tender for a unit at Block 568B Champions Way drew 9 bids, with Caring Medical Clinic securing the lease for 26,900 Singapore dollars per month. These figures saw a growing trend of rising bidding for clinic spaces in HDB estates, likely reflecting increased demand for medical services in densely populated residential areas. While public reaction to the Tampines bid remains mixed, the underlying dynamics suggest a competitive healthcare property market where bidders are willing to pay a premium for strategic locations. Concerns have emerged online about the sustainability and implications of the record 52,188 Singapore dollars rent for the Tampines clinic. Some comments on the Straits Times Facebook page questioned whether such high bids are only viable for large, well-funded medical groups. One netizen calculated that if the clinic averages 100 patients daily, over 20% of an 80 Singapore dollars consultation fee would go towards rent. This sparked debate on whether such cost distribution is acceptable in the context of public healthcare. Another comment criticized the justification for the rent, arguing that high prices risk excluding patients who cannot afford care. An FB user estimated that with 70 patients daily and typical staffing costs, the clinic would need 36 Singapore dollars per patient just to break even. A self-identified real estate agent questioned why the government has not acted to stabilize rising clinic rents, despite success in cooling property prices. On 8 May, MOH and HDB launched a pilot scheme using the price-quality method to evaluate GP clinic tenders, prioritizing service quality over rental. Bartley Beacon's 100 SQM clinic opens in the 4th quarter of 2025, aiming to enhance care under healthier SG. Expansion depends on pilot success.